Good evening. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for Wednesday. And yep, we're at Wednesday evening now, June 18th, 2025. And remember, Juneteenth is tomorrow, the 19th. And what takes place then is these markets all behind me are closed. So the stock markets are closed. The futures markets are open on the indices. They have abbreviated trading sessions. Your broker should have sent you what the hours are. If not, you should be with us. It's really that simple. As you can see, it was pretty much a mixed day. We had a lot of news coming out today, so let's go to something that we have here. I want to first remind all of you, I've had an outside day course. Outside days happen on ETFs, stock charts, futures, all the time. It's a regular phenomenon. Okay, it's not every day, that's not what I mean, but between all of that you're watching, let's assume you're watching 30 charts a day in both arenas or 40 like I do, there's generally one of them's going to have that. Not it doesn't have to, but it generally does, all right? And I use it because an outside day, when it stretches on that chart, it gives you a lot of information. And even if you take a look at candlestick chartists, they'll look at what outside days do. They have names for all these things. I find it so much easier with a regular bar chart. The more you confuse things, the harder it is for me to understand them. So I've created a course. It does include in the course the charting software you see me use here. It does include all the videos, and in the mornings, you get my video that you can read at morning or the afternoon. You can view it. And I reinforce what I teach. And you get to use those. The course is inexpensive. Give yourself a treat. All through here, you'll see the icon at the top up here. Just give it a click and away you go. All right. So in terms of data, there's no government data tomorrow as the government offices are closed. You'll have the Philly Fed Regional Business Activity Index. That'll come out on Friday morning at 7:30. They're looking for a -2 reading, which is half as bad as it was the prior month. The Conference Board will come out and they're going to release their May leading, coincident, and lagging economic indicators on Friday at 9. They're looking for a 1% decline from the April number. And today, as you know, we had the Federal Reserve, and it's exactly as I was telling you. The Fed doesn't know what to do. They're caught, and they admit it. They are in a dilemma here where it's very possible that their two mandates go into conflict with each other. The Fed said that they are still looking for the impact of the tariffs. They're not seeing it just yet in either inflation or hurting in the labor market. Both markets are in good shape. The Fed is well positioned to deal with it. The Fed can't make rules and get ahead of a game that they don't know what the game is. What are the president's tariffs? What's he going to do? He told us just shy of 2 weeks ago that we would get within 2 weeks how he's setting all of the country's tariffs. Now, when he said that, in all fairness to him, he didn't have this Iran situation the way it is right now. But he's got that. So, as usual, he says something and it can be delayed. You know that. But tariffs, are they going to be 90 days again? Are they going to be the same ones they are? What does the Fed have to deal with? And because of all this uncertainty, even if he gives tariffs and they're temporary, how does the Fed deal with that? So I realize so many people are thinking September's when the Fed will make a rate cut. I'm of the camp, probably not. All right. Logic just tells me that why? They're data driven and they don't have the data. And I don't know that they'll have the data at that point in time. And September's not far away. It's 90 days. So why don't we just say, let's see how this all plays out, at least into July and August, before you can come to any decisions. So I don't have a priority to it or belief that they're going to move or not move. I'd rather have an open mind. It was interesting what the Fed chair also said. He said on the dot plot, he said, I wouldn't put a lot of grain behind it. And he said, the members are caught just like what you're seeing. This is what they think might happen, but they're not committed to it. Nobody's name's on it, as you know. So we had a pretty good mixed day today. Oil prices gave something up. Amazon was down a little bit. Home Depot's been coming down, as you're aware. What is that all about? Well, if you looked at the housing numbers and you saw today what was going on with starts and permits, it's bad. We had the lowest amount of starts since, I think, May of 2020. So that gives you an idea that the builders, even with the ability to buy down mortgages and the like, they're just not getting the foot traffic. They're cutting prices into their margin as well. They've got to get mortgages coming down to make people able to buy, and home prices have to stop going up because people with the high interest rates and the higher prices aren't qualifying. And new homes, that makes them real expensive. So things you got to think about. GM and Ford just hanging around here. Silver pulling back. Now, I'm liking what I'm seeing on the pullback for the silver futures. I'll talk about that on Monday morning in my subscriber video because we're now getting interesting in SIL and SLV. So when we come to ET, we've been covering this chart. It's now at an important juncture, right here, right now. As the market's pulling back, the last break low in the market was 1776. That's a strange number, America. As long as you don't take that out, this is a pullback in a market that is pulled into the major moving averages. If it's going to make a run here, it should not take that out, in my opinion, and then start moving back up and challenging maybe the 1824 area, the 100-day average. 1843 would be the ultimate thing to do. Don't know if it'll do it or not. In terms of momentum, you're not overbought. Momentum's been down and the market's broken with it, so can it find its footing is going to be the big question. In MP materials, the market just keeps running to the upside. Again, this is the rare earths, and you can see what they've done. Might not be the thing for me to follow anymore. A market that goes on a vertical move like that, and it has just gone up from 24. I just started covering this. From 24 to 37, that's a 50% increase. Too difficult right here. Then we come to Broadcom. I like this action. I like when a market starts going sideways and the Bollinger Bands narrow in around it because a move's going to come out of that. Do I care which way? Absolutely not. If it's bearish, it's got to prove it can close under 247.81. If it's bullish, it's got to get back over 255.18 and hold that. So we'll see if it can do that. In Google, this is, in my opinion, a correction in a market that's been overall bullish. The 18-day average at 172.83 is the key number. You've broken today and you're back to 173.32, and you've corrected a market that had overbought readings up here in the Bollinger Band. So now it's got to restructure itself and tell us what it wants to be. Netflix, I'm looking for the 1217 level, the 18-day average, to be the next spot it looks at. But I don't think this market's tradable right now. And you're going to go, what's he talking about again? Suddenly, we're going totally sideways in the Bollinger Bands against the 18-day average. You generally get a lot of fits in this. Now, what do I mean by that? Tries the upside, can't do it. Tries the downside, can't do it. Eventually, it breaks up, but I think it needs more time than that to do it. I could be wrong, but that's what I think. Robinhood, I think it's going to try to embed again. And if it does on the pullbacks, that could be interesting. It's overbought right now, certainly bullish, and could be headed to the 80.09 level. In Tesla, okay, what's going to happen with everything that's going on? That's going to be the important thing. Today we saw that Uber got hit and some of the others as Waymo is applying for a license in New York. And, I had people tell me in Chicago why these things won't work. They go, well, the congestion, the driving. New York's pretty bad. I've been in a Waymo. I am impressed. I cannot tell you how impressed I am with that car and its ability. I was blown away on a scale of 1 to 10. The car even had a problem, and all of a sudden you're talking to a live human being. They pull off the side of the road. It was a fascinating experience and so well done because my buddy's seatbelt wouldn't work that they credited the trip back, dropped us finally where we were. He had to hold the seat, and the car went, they said, right into service to be repaired. It was cool. So now what's going to happen? Well, the other vehicle things fell a little bit. Okay. At the end of the day, why wouldn't Lyft, Waymo, everybody be working with these autonomous cars? It doesn't make sense not to. There's always money involved. It's how much they're going to get, and you work through it. All right. So as we look at this, should Tesla close over 332.05, it actually then is breaking out of a range here that maybe it gets bullish again. Interesting. We'll find out. In stocks, I still love the semiconductors. They're still embedded here. So I'm still looking for even higher prices on all of them. The financial sector is still in the bear camp. You've been under the 18-day average, the red line, for this whole week. Market's still acting like it can go down. It made one run at the Bollinger Band. Maybe it goes again. You're already at a 30 reading, so a steady to lower market, you're oversold. So I'd be very careful about deploying new money in a oversold condition. That's one of the rules that I teach in my courses. XLI, lower highs, lower lows bearish, not oversold. Room to run, but. Do you not see how tight the Bollinger Bands are getting? You're starting to go sideways in all that action. Then we get to the energy sector, and you've had this phenomenal run. It's overdue for a little bit of a pullback. Here is an outside day. You just heard me talk about an outside day course, and as you hear me always say, you'll see one of these patterns show up. What do you do with it? What do you do? Is that a continuation or an end of a move? I'm not going to tell you. My course will teach you that. What to be looking for. In gold, pulling back to the support level, maybe the 308.75 can hold it on this particular run. The market is getting out of being overbought. Neither of the numbers are now over 70. So now you go, do I want to own it again? I've read a lot of reports where people are saying GLD and gold itself is tired. It's been a big rally. It isn't a big rally if the U.S. starts dropping bombs on Iran. We don't know what's going to happen at that point. So it would not be a big rally. You could instantly go right through that high. In the silver market, I like this better than gold. I'm looking at the market with the embedded reading. I think on pullbacks here, you're going to get the pros really taking a hard look. The copper market, well, you lost the bullish embedded reading. So now the market acts, to me at least, like it should go down to wherever the 18-day average is before it takes out the most recent high, which is not this one. The most recent is right here. So we'll see. That tells me there could be a bit more downside in the market. In BND, well, you made a run. You just made your run today. You got to the upper Bollinger Band. You see how well it held? Didn't. You're overbought. You're in an uptrend. Be careful. In the dollar, this is the zone that the market should be fighting a battle. It's, first of all, not trending. You still have a lower low, higher high. It's another first move back to the 18-day average, and it hasn't done well on those moves. Now, admittedly, back here, you didn't have the U.S. threatening Iran to bomb them. You do now. So little bit difference, and you got to take that into consideration because it's a big event. And in FXC, I can make an argument to get back to the 18-day average. But long term, I think the euro bullish, dollar bearish. So that's where we're at. You have yourself a great Juneteenth. Take advantage, get the outside day course, and understand what we're talking about here. IraEpstein.com. I'm Ira. Have a great holiday.